Hi, everybody. This is Josh Jelinski, the financial quarterback, and we have special guest from HC Wainwright, David Ranson, the president and director of research at HCWE Inc. Prior to becoming a general partner of HC Wainwright, Mr. Ranson taught economics at the University of Chicago Graduate School of Business. He has been an assistant to then Secretary of the Treasury William E. and a member of George Shultz's personal staff at the OMB, Office of Management and Budget. And he's one of my all-time favorite guests of the show, and one of my buddy Dave's favorite guests as well. So, Mr. Ranson, how have you been?
I've been good. Weathered the pandemic pretty well. How about you?
Yes, yeah. Thank God. So, what do you think about the Fed's decision to keep interest rates anchored near zero?
Well, I'm interested in things that interest a lot of people. What's the outlook for inflation? And in order to study that, you have to look at a lot of history to find out what factors do influence inflation. Economists are full of ideas on what influences inflation. You hear it on the news media all the time as if it was widely accepted or universally accepted. But when you do the actual homework, you find an awful lot of these ideas don't work. And that's my job, to find out what works, what doesn't. And that's why I'm very interested in the value of the dollar. So I think you have to have a history for the value of the dollar, and that gets increasingly more difficult too.
From the old history of the dollar, what does it say to the new thing? I mean, I'm not of your economic chops, but to me, the dollar is becoming worthless over, not worthless, but worth less every year. I mean, I look at, you open up a bag of chips and it's, 1/8 of the bag now. It used to be ridiculous when it was half of the bag. You look at lumber prices and steel, and I had Dr. Lacey Hunt on a month ago, and he said, well, that's not a sign of inflation, that's a sign of disinflation. But to me, it looks like inflation. What do you make sense of what's going on with the dollar?
Well, the inflation rate varies a great deal over long periods of time. What's going on with the dollar right now, though, is that it's falling. You can measure that in different ways. And again, that's my specialty, to figure out the right way, the best way, the most predictive way to measure. And the classical answer is to watch the price of gold. I don't follow the classical view 100%. And I believe the price of gold can sometimes mislead us. The price of gold is falling now, which suggests less inflation, but I think that's not right. And you have to make adjustments to the price of gold to eliminate what you might call contamination. But when all of that is done, the corrections are made, we've got a rising price of gold on an adjusted basis, and it's a very rapid rise, something like 2% a month, which is adding up to, it will eventually add up to a lot of inflation. But historically, that's not always been the case. The price of gold goes up and down.
But 2% a month, my argument for why gold is not going up, even though it looks like we have inflation, is Bitcoin has sort of taken the place of gold. So all these former gold bugs are now into Bitcoin. And that might be the reason that gold is falling. I don't know. What say you about that?
Yeah, that's not how I see it. I think however much Bitcoin might take over, Bitcoin prices will be indicators of inflation as well, perhaps. But they won't destroy the power of gold to reflect inflation. Even if you have fewer people trading in the gold market, so you might say the market is smaller and less efficient, they're still trading at the price that the market sees as appropriate given the inflation situation. So I don't think gold is threatened at all. as an indicator. The main problem with gold is that when you have geopolitical problems going on, like confrontations in the Persian Gulf with the Iranians, and especially when you get a pandemic, the price of gold rises. It's a safe haven asset, and people want to buy it, and that distorts its price. There may not be any, however much inflation or little inflation there is in the picture, the price of gold can rise and disguise or make it look as though there's a lot more inflation than there actually is. And then when it falls, which it always will do after the crisis is over or the crisis is abating, the pandemic is abating, then it looks as though you're having less inflation when in fact the underlying price of gold, adjusted for all of these special circumstances, is still on the rise.
How is that? It doesn't make sense to me. Gold is, I don't know what gold is today, but gold's been flat to down for a while. Why is gold not rising in price if we're having inflation? I don't get that. Because
our anxieties about the Iranians, the Persian Gulf, may be a factor, but the big one is the pandemic. There was an enormous rise in the price of gold as investors dropped a lot of assets and went into gold for safety's sake during the early stages of the pandemic. And all of that fear has slowly abated. And it's falling all the time, and people are getting back out of gold and going into stocks and bonds and other assets.
Yes, so you don't think there's any, I mean, I just talk to people who are buying Bitcoin, and some of them are, yes, if you look at Bitcoin, whatever, it's a $1 trillion to $2 trillion market cap. It seems like it's taking, if you just added all of that movement to Bitcoin, especially in the last year, those would have normally been your gold bugs. So I don't necessarily think that Bitcoin isn't the reason gold's sluggish. So you would say due to the pandemic, gold artificially went higher maybe than it should have a year or two ago? Is that?
Yes.
Is that what you're saying? Okay.
It's happened many times in the past as well.
So you had this run up in gold. People were flocking to it as a safe haven asset.
Yes.
I mean, but I think, I don't know. There's no real data like gold contra Bitcoin, but Bitcoin just went so far down during the pandemic in March of 2020. You wonder if people wanted the real thing with gold. You know what I mean? And now as the world wasn't ending and people didn't need physical gold and, toilet paper, then they go, you know what, I'll settle for digital gold. I don't know. And maybe that's not how. Oh, go ahead. Sorry.
The test is, once you get one of these histories of prices, and we have a very long history for the price of gold, and we have a long history for the inflation rate, and you can just compare them. The correlation is extremely precise. It sometimes goes off, but I think that's during these geopolitical problems. And if the correlation is tighter than any other indicator that you can find if you want to forecast inflation.
So you would say then, with inflation on the rise, you think gold's going to be higher a year from now?
No, I'm saying that because gold is higher, taking out the effects of the anxieties fluctuating, because the price of gold is higher, it's a sign that people are pricing the inflation that is yet to come.
So we
can test this very easily because we have contemporaneous behavior on measures of inflation. I don't use the official measures that the government puts out because they're mixed with a lot of information which is very, very tardy and slow to adjust. But if you take an index, which I like very much, the index for consumer goods prices, you forget about the services where pricing is very questionable. But the price of consumer goods is also rising right behind the price of gold and confirming the signal. especially in the last 6 months. And what we know from history is that the rise in the price of gold anticipates further rises in the prices of consumer goods. So we know there's a lot more inflation in consumer goods prices yet to come.
About how long do you think this will continue?
A couple of years, just from what's already happened. But of course, it may not go on. The price of gold could stabilize. So beyond that point of stabilization, we don't know. But there's no sign that it's stabilizing yet.
So if you were to... Oh, go ahead.
I'm just going to mention that you can see it in commodity prices. One of the closest indicators, very closely correlated with inflation, but also very closely correlated with gold prices.
So we're with Dr. David Ranson, world-renowned economist, author, talking about gold, inflation, Bitcoin, and whatever question you have. So head over to youtube.com and you could type in the chat box any of your questions for David Ranson. And we're going to ask him all about his work. New strategic asset selector. If you go to his HCWE.com website, talk to him about forecasters. How did forecasters get the pandemic economy so wrong? Interesting question. And more when we return. This is Josh Jelinski, the financial quarterback.